Hello everyone and welcome to today's cryptocurrencies update for Friday, September the 2nd. Prices have gone sideways for most of the cryptocurrencies, except maybe Polygon / Matic. That's one of the altcoins I am most bullish about. It's not an endorsement, that is a simple assessment of the charts. But with that, I don't want to go regurgitate everything I've said over the last 4 days on the breakout levels to watch and the breakdown levels to watch and where they will target us, as I showed you, for example, in Wednesday's update, where that will lead us on Ethereum on the breakdown to around 1,000. But if we break out, we're going to go to 1,700, 2,000, and probably even beyond. Similarly for Bitcoin. Okay, so I'm going to review a little bit, but let's have a look at the bigger picture charts. And for that, I'm going to use the weekly charts. I know the week for cryptocurrency is not over yet. That will be Sunday, London midnight, but it's not Sunday, it's Friday. Mondays, the financial markets are closed, so there will be no update on Monday. Please keep in mind, no update on Monday. So let's have a look at the weekly charts now. They can change, of course, over the next 2.5 days, but for now, let's assess the data at hand. Here are some household items, as said. Please use those to the best of your abilities to try to make money. Never forget my crypto hedge fund out there. I think we're up 15% this quarter. We're doing very well. Just cashed in another winning trade, watching for some systems to go long. All that good stuff. So there's ways for you to make money. And yes, it costs money to make money. Smart people understand it costs money to make money. Smart people think about risk and not about the profits. Dumb people think only about profits and forget about the risk and lose everything. So please stay smart and make sure you manage your risk, because in a bear market, he or she who loses the least amount of money comes out the winner. If a cryptocurrency is down 70, 80%, and your portfolio is down 10, 20%, you're beating the market, you've done much better. Bear markets are meant to destroy value and wealth, and of course get everybody wrong-footed eventually. So it's very hard to be able to make money in bear markets. So if you lose a lot less than the actual underlying currencies do, because you're trading smart, you have risk management in place, you take profits quickly, you trade small, you have tight stops, all those things, you are doing better than 9 out of 10 people. I cannot stress it hard enough. Pros think about the risk. Amateurs, stupid money, the dumb money, only thinks about the profits. Do not ever think about profits. My crypto trading alert service, for example, never gives an alert on where to sell. Okay, once it enters it, it will just have parameters that tell you eventually when to sell. But when the trade is entered, there is no target or anything. But there is always a stop. It always thinks about the stop and nothing else. That will protect you. If not, please have a look at Luna and all the dreaded stories around it in the news of people losing their shirts, their life savings, you name it, their nest egg, all lost because they had no stops in place. Good luck. That is not what we're here for. We trade with stops, and if that is then 10 losing trades in a row, they should be very, very tiny. Technically, a loss should never set your portfolio back than a few percent at the most. All right. Please keep that in mind. Trade small. A lot of these cryptos are still in bear market setups, except maybe a few. As I said, most. They're below their moving averages. They're below their Ichimoku cloud, all that good stuff. So I'm hammering it home. I know I've not reviewed the charts, but I'm hammering it home. You cannot get this type of advice on YouTube with some advertisement that promise you the skies, and 9 out of 10 times you will end up in the sellers if you follow their lead. So please trade careful, always, especially in the current environment. We're probably in the early stages of a bull market, but nothing's been confirmed yet. So let me go first to the charts, and after that preaching, so to say, but it is very, very important. Let's have a look at where we currently are. So this is the weekly chart of Bitcoin. Already here in the spring, I was looking for this 3, 4, 5 pattern to materialize. I dropped to about 28,000. We would rally to about 34,000 and then drop to about 24,000, all plus or minus 1,000, because this is based on Fibonacci extensions of typical third wave, fourth wave, and fifth waves. That is all we can go by. If the market then decides to extend or truncate, we know it can happen, but we don't know if it will happen. And then we extend it a little bit. Then dumb people think that, well, you forecasted it would go to 24,000 months ago, so that forecast is fairly set in stone and shall never ever be changed. But of course, the forecast changes when more price data becomes available. You start off with the initial assessment, and as more price data becomes available, you adapt accordingly and adjust your price targets accordingly. Anticipate, monitor, adjust. You anticipate a standard Fibonacci-based impulse pattern 3, 4, 5, and then you see if wave 3 extends, wave 4 truncates or extends, and wave 5 can also extend or truncate. You don't know that beforehand, you monitor beforehand. If one can already forecast in March that we're going to go to 24,000 when it's trading at 40,000, and it ultimately bottomed at around 18,000, I think, honestly, one has done a pretty darn awesome job. You got the direction correct, you know where it's going to head, and that you cannot exactly know in March when it's trading at 40,000 that it's going to drop to 18,000. If one thinks that is a failure, you don't understand, again, how markets work. I'm really, really serious about this. So we've now potentially completed wave 5. The ideal wave 5 is 12,120. That is where C is A in this wave count. So we have then the primary 3 top here in November, an A, a B, and a C. Normally, C is A. It doesn't have to be that way. C can be shorter, C can be longer. That's the simple known unknowns. We know that it can be longer, we know it can be shorter, but when the C wave starts, we don't know. I knew we would bounce here once this wave was completed to this target zone. So we reached the bare minimum, and then you do a CSA extension and you track to see if it gets there. It might not exactly get there, but it's still possible. What I do want to point out is that we are now seeing extreme positive divergence. Again, we have 2.5 days left, Monday and Saturday and Sunday. So this can still be erased, but it starts to look good. What is positive divergence? It means that price is essentially going lower, but in this case, with increasing strength. Also look here at money flow, look here at the MACD. Now you might say, well, we're not as low as we were in May and June, but if I simply take closing prices here, you can really see that we are pretty much at the same level, right? Around 19,000, right? This critical level. So indeed, we're at the same level, but not as oversold as here. This is a classic third wave type of behavior. That third wave was then here. And then we had a fourth wave spike. And now we could have completed all of this CSA. The alternative, there's always an alternative. If you use Elliott Wave, you have a preferred option and an alternative option, at least one, because the financial markets are probabilistic in nature. So there are probabilities to possibilities. So you got to track those. So you can never have one wave count. You can have the preferred one, but there should also be an alternative one. Why? Because markets progress based on new information that becomes available. Everything you know is already priced into the markets. The market knows more than you do because it's based of all millions of traders and investors. The alternative is that instead of the blue 3 here in late last year, the blue 3 was already early last year, and we are in a very prolonged, irregular, expanded, flat wave 4. 3 waves lower, 3 waves up, 5 waves lower. 3, 3, 5. Please go on my website to check out the Elliott Wave patterns. Okay, you do have to have some basic understanding of Elliott Wave to know what I'm talking about. So you can go there, as I showed you on the clicks. Just go to my website, click on menu, click on education, Elliott Wave Principle, and you're good to go. So this is 3, 5. As an analytician, one has to recognize the patterns and try to assess them as good as one can. So then the January low this year was 1, the bounce into March was 2, then the June low was 3, the recent August high was 4, and we're now in wave 5, which can target 10 to 12,000. Okay, that wouldn't surprise me if that's the case. We're still not there yet in saying, okay, we have confirmed the new bull market. There is still many steps to go. So we have the positive divergence on the weekly chart, which is great. But again, divergence is a condition. It's not yet a signal. I do, of course, want to see price break above the August high. Then I have a very hard time believing that we're going to go lower and revisit the 10 to 12,000. But it is still possible. So the potential is still in the chart. Does look better like 5 waves up of the June low. If you look here closely, if we're going to zoom in here on a closing basis, you see up, down, up, down, up. So that's 1, 2, 3, 4, 5. Okay, we can go back here in weekly time frame, and you can see that we are then in a up, down, up pattern. Okay, so we have up, down, up, down, up. 5's up, but second waves can always become more complex. After 3 waves lower, expect at the minimum 3 waves back up, because we can, for example, turn this into a flat, and then 5 waves lower. 3 waves lower is the minimum for a zigzag. That brings me to Ethereum. So quickly back to Bitcoin. Bitcoin hasn't proven its bullish potential even on the weekly chart, neither on the daily chart. The diagonal I've been tracking since the June low can also be a B wave, or in this case, a 4th wave that really hides itself looking like a impulse. It's really possible. If you misinterpret it one up-down sequence, then it suggests it's not 5 waves up or 3. But it looks good, still looks constructive. So here then is Ethereum. Ethereum, in my humble opinion, top tier for wave 3 in November last year. And then we had a simple ABC zigzag lower with CSA at 869. I think we got 872. So this is as close as a C wave gets. So this shows you that's why one can still maybe potentially expect Bitcoin to go this low. Doesn't mean Ethereum or any other cryptocurrency has to go this low. Okay, so Bitcoin can still try for this low. Doesn't have to, but it is possible. Then we follow this path. I'm good with it. Either way, I have my options on the table that if we go lower, I know what is going to happen and what's going to happen, bigger picture next. So the weekly chart, back to Ethereum, this was the anticipated path in black, and what we got was in red. So the anticipated path is, of course, very crude. Of course, I can subdivide some of the waves. That's fine, but we got a pretty darn accurate. Again, that's the Elliott Wave. It can really help you in telling you what to expect. That's the anticipated path. And the devil is in the details. One cannot exactly know all these wigs beforehand, but we do know that we're going to go lower. Back then, this was already early of this year, many, many months ago, I was looking for a low somewhere around 1700. We went to 869. Okay, so did I miss it by 50%? Yes, I did. But that is where you simply fill in the missing blanks once more price data becomes available. Now, on a weekly time frame, it looks like we might have this question mark 4. I haven't changed anything about this chart since a couple of weeks ago. Shared it with you. And now we could be a potential 5. This chart is slightly different than that from the daily chart, but it's okay. Eventually they will align. But it suggests that we should see a rally, then a pullback, and then another rally. Maybe on the daily time frame, it will be a 1-2, 1-2 setup. It's fine. As I said, eventually L stars will align. And then we still have a fantastic bullish setup in the weekly chart. And that's what matters, that we have a bullish setup in the weekly charts. But I have no resolution just yet. We do have, of course, this slight positive divergence. We're above several key long-term moving averages, buy signal on the MACD. So far, this looks reasonably good. If we don't see this and we drop lower, then we follow, of course, Bitcoin's path. Moving on to Polygon. As I said, Polygon is one of the altcoins, at least the ones that I track. I mean, there are 5,000-6,000 different coins out there. But of the one I track, I find this one the most bullish. Compared to especially Cardano and Solana, though they might be longer term even more bullish, but shorter term, I have no indication they've bottomed yet. Whereas Matek or / Polygon starts to look much better. So I still view this as a wave 4. Remember, back in the day, I said below $1.03 is warning, and we might revisit $1.60, even $1.40. That was the ideal wave 4 target zone. We reached it, we went to 32 cents. Not too bad when you warned already when it dropped below 1.3 that we would go to 1.416. That's what stops are for, right? That's exactly the down move you can prevent and put your money somewhere else or keep it in cash. So on a monthly closing basis, we bottomed right here in the ideal target zone, and now it looks like a 1-2 setup. Of course, we need to break back above 1.3, and especially, of course, above last month's high, the August high, which is at about $1, to move much, much higher. But that we already knew from the short-term work. You see how the short-term work fills in the long-term work. Already here back in July, we saw the breakout. When Maytech broke out above this downtrend line and held it, we turned bullish, and that has been correct. Now, the question is simply, how is this wave 2 going to fill itself in? It is possible wave 2 is already complete. We have done technically enough. That would be a very brief, short C wave in green, or we're going to do this path. So we get the A, the B, and the C of a more prolonged wave 2, deeper into the ideal wave 2 target zone. Once wave 2 starts, or wave 1 tops, we know that a second wave should somewhere retrace between 38 and 76.4%. You just don't know yet where. So far, we've done the bare minimum. We're right there at support, 0.753. We go below it, we can target 0.6. That will give us a 62% retrace, and that would be a CSA relationship. So 0.6 is still very possible. It doesn't change the intermediate to longer, bigger picture. Okay, then we still have a 1-2 setup in place. So if we break above $1 straight ahead, that's the blue line, bullish. If we first break lower and then we steam ahead, bullish. So I have a hard time believing this is not a bullish chart. Simply how we're going to fill this in over the next few days to weeks. But ultimately, I think it's going to resolve itself higher. Of course, if we move lower into the more thickly shaded ideal target zone of 50 to 62% retrace of this rally, oh, we can even go to 48 cents. Not a problem, by the way. Not a problem, very normal. Just don't have price data yet to support either of these targets. Then we have to simply make sure that the wave 3, 4, and 5 target zones are adjusted slightly lower. Now, if we've bottomed already, we're going to go to about 220. If we're going to go lower, we lower the target zone, then we're going to go to about $2. Ultimately, I still see $2 on the chart for Maytech. I see no reason to change that at all. So then we're going to look here at Cardano. Okay, if you have questions about Maytech, I'm here to help. Please email me, okay? Don't hide in anonymity. I cannot help you if you don't ask anything, then it's on you. I cannot help the quiet people. No silent yeses, all right? And if you need help with trading, please remember, we have my crypto trading alert service. That one went long Maytech already a couple of days ago, so, and it's already cashing in profits. So if you want true trading alerts, sign up for that one. I'm here simply reviewing the charts and what I'm seeing. That's a different ballgame. You need to apply that to your own trading. It's a different ballgame, okay? Know the two differences, please. So this is then Cardano, 5 waves up, and I think we're now in this C wave of a larger correction. I have no signs this has completed just yet. This is the monthly time frame. It appears some positive divergence is developing, but it's only September 2nd, so we have many more days to go. This can bottom here at about 35 cents, maybe 15 cents, or all the way down to about 3 cents. These are the blue support levels. Resistance is, of course, at 70 cents, 95 cents, and 140. Those are the resistance levels for now. I don't want to go any lower. 3 support levels, 3 resistance levels, one step at a time. This is not a healthy looking chart at the moment. But if ultimately, when this C wave bottoms, we're of course going to look much, much, much higher. So I think longer term Cardano might be in a more bullish posture than, for example, Maytech, which is then doing its final 5th wave currently. Whereas this is going to do a massive, another multi-year bull. Yes, it's still possible. But for now, the shorter term doesn't give me any warm, fuzzy feeling. So we have to let this play out. And that's why I don't update on the shorter term. Solana, same deal, A, B, C. B was only 38.2% retrace of wave A. Normally it should be 50%, that's normal. But 38.2% is quite normal as well, just as I showed you here for Maytech. Okay, so please keep that in mind. It doesn't have to always be 50 to 62%. 23.6% is also fine. And eventually we should drip lower to about $20. Then that should be cycle 2, and it is time then to gear up for cycle 3, 4, and 5. So also this one has, in my humble opinion, long-term, a very good potential. But short-term, over the next days, weeks, and months, I have no indication that cycle 3 has started. So we're still, in my humble opinion, in cycle 2. I have no indication that cycle 3 has started. So that's why I'm not as bullish on Solana and Cardano compared to Maytag, because Maytag did, in my humble opinion, a nice clear 5 waves up. The monthly chart also looks better. That I don't see yet for Solana. Okay, so that's all I have for today. In summary, let's review it. Bulls are still not out of the woods, but even the bearish bigger picture counts are nearing their end. Bitcoin, if it drops to 12,000, that's the end of it, or we're going to rally and the low is already in place. Same for Cardano, Solana. I see no indication that the current correction is over. Maytag, of all of these, looks still the best. We have, in my humble opinion, allowed to clear 5 waves up. Just shorter term, maybe the next couple of days, weeks, we might see a C wave lower for a larger second wave. It's not necessary. As usual, we get the breakouts, we know where to watch. If we get the breakdowns, we also know where to watch. For Ethereum, for Bitcoin, there are 0 surprises so far in the charts. Everything is trucking along, and we'll have to let the markets decide which path it's going to take. So short term simply doesn't give much happiness for Solana and Cardano. Bigger picture wise, I think there's plenty of upside ahead, but please remember, if you buy it at 10 and it drops to 1, you lose 90%. So then you might think, I'm going to hodl it, but maybe it's better to buy it at $2 once the low is in, because even from $2 to $1 is still 50% loss. Please keep all those risks in mind. Risk, risk, risk. And with that, have a great 3-day weekend. Take care, trade safe, and I'll see you all on Wednesday.